Welcome everyone to the weekly outlook for this new week. So it is Tuesday. So you have seen the market kind of price in a lot of the fundamentals from over the weekend. And I'm pretty sure if you guys have been trading for quite some time, or if you're new to the channel, welcome. Then you guys already know kind of what's going on, especially with the macro fundamentals with Russia, Ukraine. This is something that we have been talking about for some time, right? So last week, just to kind of do a recap, late last week, especially around Friday, and then also over the weekend, we had some news about potentially Russian troops moving towards the border, a little bit closer to the Ukraine border. And the sentiment was put out that Russia was going to invade Ukraine early this week. So we saw the markets reacting to that. And obviously, we are still starting to see some fundamentals come out. Today, we had some updates, so let's go ahead and first start off with that. So last week, we talked about how there's a lot of different countries that are on the sidelines, pretty much waiting to see what's happening with Russia and Ukraine. There have been threats that have been put out by the presidents, prime ministers of a lot of different countries, telling Russia that, hey, if you move forward with this, expect sanctions, expect like wars, expect, all sorts of different comebacks. And so right now, what we have is Biden says the threat to Ukraine remains, and he's telling the Russian president that, hey, if you're going to continue invading Ukraine, or if you don't back off, then there are going to be other sanctions that are going to be put in place, and you will, encounter some comebacks from the United States specifically. So go ahead.
I'm sorry, did this come after they backed off this morning? Because they backed off around London session.
Right. So this came out this morning. So this came out like actually in the afternoon right here.
So his response, it's like they're backing off, and his response is like doubling down on the threat.
Yeah, so basically what they've done is they're saying that they're backing off, but we haven't seen, or at least from what the presidents and the prime ministers are telling us, is that they haven't seen Russian troops actually just moving back to a point where you can say that the threat is no longer there. Okay. Right? They've moved back to a point where you're still in this threatening position, which they're talking about right here, but they haven't moved back to the point where you can say that, hey, there's no longer a threat to the Ukraine border. So this is exactly what we were talking about last week as well, right? Where it's pretty much like, poking at it. We don't think they're actually going to do this. Well, I personally still don't think that, Russia would still move forward with something like this, given that there is a ton of countries on the other side of this who are supporting Ukraine. But I do think they're kind of poking at it, and you are seeing the markets kind of reacting to that with the uncertainty, right?
To me, that move this morning, it just felt like it was like a calm before the storm kind of thing. I don't think that this is actually going to happen. I wouldn't put it past Russia, but at the same time, I agreed with what you said the other day. With you don't think anything's going to happen to this. Very well could. But at the same time, the likelihood probably less than 50%.
Right.
But to me, it was like I heard that this morning as soon as I woke up, checked everything that was going on. You saw gold tank, and I was like, this seems like something where it's like backing off just to tease them a little bit, and then they said something about Wednesday. Something happening, right? If they were going to do it, which doesn't make sense either as far as
the biggest thing is if anything is going to happen. The reason why I don't think it's going to happen is because Putin himself has acknowledged that, hey, on the other side, we have a ton of different countries, a ton of countries that will be, coming for us, whether it's in sanctions or anything else. And so that's why I think that he understands what's pretty much at stake. So I'm not saying that Russians don't have the ability to move forward with something like this. I'm just saying that I would hope that there's some sort of, sense that, hey, you probably shouldn't from an economic perspective. Yeah. And that kind of just takes us right into what they were talking about, sanctions here, where Biden has said the U.S. stood ready to respond to a Russian attack with crippling economic sanctions, which is resulting into, we're also seeing commodities, not just like the gold, but also oil being affected. Russia, third largest producer of oil in the world. Necessarily the U.S. doesn't really depend on them too much, but the Eurozone does. Yeah. So we saw a lot of Euro pairs being affected by this as well. And a lot of the countries in general in the Eurozone pretty much getting ready for higher fuel prices. And it's the same exact thing that Biden is saying that, hey, we're going to place these sanctions and Americans could end up paying higher fuel prices. But here is the thing, that even with inflation and then the whole global oil supply chain and all that, those issues that were going on, we saw Biden's administration coming out and actually releasing oil from their emergency reserves. So is this potentially something that we could still end up seeing? So he says that the administration is working with energy companies and Congress to preempt any problems with supply, but is that another thing that we could probably end up seeing? Right. So you have pretty much this one geopolitical tension going on with Russia, Ukraine, and then you're starting to see these rippling effects of like, okay, now it's going into oil. Well, then who really controls the overall oil production? OPEC, right? So then what are some things that we could see getting into OPEC meetings in the upcoming few weeks? So that's something else that we can start thinking about. Now you're starting to see that rippling effect through the global economics.
Absolutely.
So does that pretty much answer?
It's all like interchangeable. It's all
Yeah.
like, everything's involved, especially oil when it comes to war and, anything going on with that you're going to see a big difference in that.
Yeah. And then moving on, because, we have talked about a lot of other countries. And so that just from the US side. And now on the UK side, you're seeing that Boris Johnson, the prime minister, proposes stopping Russian firms from raising capital in the UK. That's another type of sanction, right? So what the US was just talking about in the article was sanctions with oil and, all those type of things. But then you also have the prime minister of UK pretty much stepping in and they're saying like the Russian firms, you can't raise capital in London's financial markets. Right. They're pretty much stopping them. That's a hard stop. So these are just different ways. And then as you go through this article, obviously you'll see like some more details about this and some other sanctions that they're going to be imposing on Russia. But this is just, goes to support what pretty much we were talking about last week, where there's a lot of different countries that are sitting on the sidelines. They're watching what's happening and they're, ready to step in and take any possible actions that they may have to. So now you are having those geopolitical tensions rising and you are seeing them being affected across different countries, across different regions. And then now obviously in the financial markets, as UK is pretty much stopping Russia from participating in it. So that's from the macro perspective. So this is for your gold. This is for your safe haven currencies. You start thinking about that. If pretty much US does step in and start doing like those sanctions and stuff, then what does that mean for the US dollar, right? Also being a world reserve currency where oil is also being affected, right? So all that type of stuff. So this for your safe haven currencies, commodities, oil, gold, all that type of stuff. And then moving into Japan, we're starting to see, so Thursday is going to be an important day if you're trading the Japanese yen. So the Japanese prime minister is going to hold a press briefing on Thursday, and he is going to talk about adjustments to the quarantine requirements. So for example, in the United States, starting today, a lot of places, you don't have to wear a mask, right? Going into those workplaces or public places. But I do think it's still up to the businesses to certain points where they could ask you or refuse service if they wanted to. But now we're starting to see that kind of having a rippling effect across other countries as well. So Japan is going to be talking about it on Thursday. And then you also have Germany set to join other European countries in phasing out the restrictions over the coming weeks, even though that the infections are only slightly below recent records. So you are still having those cases increasing. Nothing's really changing in that. But now the way that we're dealing with it is also changing. And the way that the governments are dealing with it are also changing. As you continue down, you're going to get more details about all the other countries. So Hong Kong right there. You also have France is planning to ease some mask rules. You have the Dutch government revealed its roadmap towards a full reopening. So now we're starting to see that pretty much the governments and people are learning how to deal with this COVID, live with it, and then move on and kind of come back to some sort of normal. Now moving on to the economic calendar, and then we're going to move on to the technical analysis with Stefanos. So this week started off quite easy. Monday, New York session is when things start to pick up a little bit. You have the FOMC member speaking here. And then right after that, you have the ECB president speaking. So the FOMC member was speaking about the monetary policy in an interview conducted by CNBC. And then you have the ECB president speaking. They were due to testify on the ECB annual report before the European Parliament. And then after that, you had a quite an easy rest of the Asian session, New York session, not much happening. And then pre-London sessions when things start to pick up again for GBP, especially with unemployment rates coming out. And then also the claimant count change, which is a change in number of people claiming unemployment benefits from the previous month. And then after that, a little bit of an easier session going into about 2 hours into London session, you had the economic sentiment coming out, which has increased when you compare it to the previous. So for me personally, when I'm looking at fundamentals, especially economic data. I pay more attention to actual versus previous rather than forecast. Forecast doesn't really tell me much besides like, hey, here are all the data points and this is what we're predicting will happen, versus the previous and actual are real data points of what exactly is going on in the economy. So we are picking up that economic sentiment, especially with Germany. I pay a little bit more attention to that, especially that is one of the bigger economies of the Eurozone. And so this is based on the German institutional investors and analysts. And obviously, as we're starting to see those numbers increasing, that does show some sort of optimism. Not completely just yet. It's just a little bit of increase, but we are kind of headed towards that. That's the picture that it's painting. Rest of London session, quite easy. And then we had PPI coming out, a massive, massive increase. So Stefanos talked about this, I think about 2 weeks ago or 3 weeks ago in one of our weekly outlooks, where he mentioned that, hey, there's a ton of costs that producers are eating up right now that hasn't even been passed down to the consumers. And now we just saw a massive hike in the PPI here, so the price of finished goods and services sold by producers. The easiest way to think about it is if you had any product, let's say a water bottle, since that's what's in front of me, to make this plastic water bottle, you need obviously plastic and then let's say paper for the, the labeling and all that stuff. If as a producer, it costs me about $1 to make it, I'm not going to sell it to the retail side for $1. I'm probably going to sell it for $2 because I want to make profit based off of that. And then the retail side is not going to sell it for $2 to the consumers. It's going to sell it for probably $3 because they want to make money off of that as well. So a bottle that cost me $1 to make is being sold in the markets for about $3. As a consumer, obviously that price is being passed down to you, right? A massive hike that just happened. That's the easiest example, pretty much. But obviously there are, other things that you can take a look at, other examples. But this is pretty much how to understand what PPI is and how does that cost get pushed down across different sectors. So from the manufacturing to the retail to the consumers. This is important to know because today in London session, in pre-London, you have CPI coming out, which is a consumer side, and you have PPI coming out and RPI. So you have all three of them coming out for the pre-London session. As soon as the market opens up, I do expect the market to show some sort of volume and as it's pricing in all these fundamentals. And then going into tomorrow's New York session, you have the core retail sales. So today you have PPI from the producer's perspective. Tomorrow you have it from the retail perspective, right? The sales, are they increasing? Are they dropping? And think about what does that essentially mean from the producer side, from the retail side, and from the consumer side. If the retail sales drop here, then obviously people are not going in and they're not spending more money. They're becoming more conservative. Right. So I do expect for this entire week, as you can see, we have some fundamentals are coming out, economic data points are coming out in New York session, but I do not expect to take any of these trades and turn them into swing trades unless they're in Asian session or in London session, because these are just quick, high impact fundamentals. And by that time, you're probably going to see the market consolidating after that. But tomorrow you do have some more fundamentals coming out from the US perspective. So you could probably see a little bit of a longer move, but after that, I don't expect anything else, given that there's not anything else happening in London session or pre-London session or Asian session.
And some crazy, data release.
Mm-hmm. And then on Thursday, it kind of calms down a bit. So then you don't have much coming out in London session, but then you have unemployment claims as they always do every Thursday. But after that, you have G20 meetings. So that's what we're going to be paying a little bit more attention to. So what's happening there? You have the FOMC member speaking again, and then not much after that. And then as we continue down, so you have retail sales coming out in pre-London session as well. So you could pay attention to that if you're trading London session. And then Friday is a little bit easy. So you do have consumer confidence coming out from the Eurozone and the existing home sales, and then the second part of your G20 meetings. All right, so let's go ahead and move on to the technical analysis.
All right. Hello, friends. Hope everyone's having a good start to the week. Let's actually start with GJ over here. We're going to start off with a couple levels, and also, as you guys know, that higher time frame bearish trend that we've been respecting, but now we're starting to break out of it. As you can see, 3 points touched on this area. Now we're starting to break out with the increase in interest rates and the recovery from COVID, exiting lockdowns. Great Britain's kind of trying to get back to, what it was, right? And what it was pre-COVID. So also you can tell just by the bullish structure over here after the 2008 market crash, right? We didn't, the basically the whole world didn't really recover from that until around 2012, 2013. And then we started this upward trend on GJ, right? People started taking their money out of the Japanese yen and putting it into riskier currencies like the Great Britain pound, right? So now we're in a similar stance where we're now kind of chugging along, creating these higher highs, higher lows. We're now in a higher time frame consolidation, but we now have to break out of that, right? So this is actually our support that we never broke during COVID from the 2008 market crash that we ended up holding support at and then pushing right back up to this level. Now, I'm just going to mark off one more trend line over here. As you can see from this wick of from COVID, March 2020, April 2020, we have been in a bullish trend ever since then, right? Our previous high over here, ever since, tanking from COVID, we were on our way right back up to retest the previous high to the left, which was 156. So we're going to mark off 156 here. And also, we are now in a higher time consolidation. So now you want to mark off the support of that consolidation, which is, as you guys know, 149. All right. So as you guys know, quick summary of what was going on over here. We had the retest of 156, right? Pushing all the way up, very heavy bullish structure over here, just pushing all the way up to 156. Then we retraced right back down to candle body highs over here to the left, right? Then we got rumored that they were going to increase rates in November. They never, this is October right here. They never increased rates in November, which you then had that complete correction of that move. Right, then we come down to 149 again, hold support from the sentiment that they were going to increase rates. And that's exactly what they did. I believe it was a surprise move in December, right? We pushed all the way back up to 156. This candle pushed all the way back up to 157, 158 to retest the previous highs up here. Couldn't necessarily reach. And then we ended up closing right below here for the month. Right, we just rejected 156 once more. So you guys obviously could see how strong that level is. Right now, it looks like we're holding a support in this area over here after increasing rates again and pushing right back above 156 to pass the high of that wick right there. Right, so right now the monthly is in a good shape as long as it stays above 156 to possibly continue right back up, as long as we don't have as much fear in the market. The Russia-Ukraine stuff, kind of curbs itself. You have Brexit isn't, there's not many things going on with Brexit. UK is coming out of their lockdowns, all that good stuff. Any kind of good news coming out and another increase in interest rates, which it looks like they may be doing based on the data that we're going to be getting out in the next couple of days and also a couple of weeks. We could very well see GJ continuing right through 156, continuing through 158, and continuing right back up to a possible wick fill of this candle right here. And I'm sure there's more areas, little pit stops to the left as well that we could take a look at, but we need to break this level of 158 first.
What I would also do is probably current zone right at those wick rejections, because we have seen 3 monthly wicks reject right into 158. Right. So if you're going to be
right here.
Yeah. So then
I normally do that in the lower time frames.
No, yeah. I'm just saying, like, in general, like if you already want to start narrowing into your price action, because if price is tapping into 158, you already know that's a strong level, especially from the monthly time frame. So if you're looking for any trade opportunities, looking for those swings turning into, or scalps turning into swings and all of that, then you know that 158 is pretty much the limitation of your trade, unless we break above that.
Amen. Absolutely. And you also have that support right here, which I'll mark off in a second. So looking at the weekly now you see that previous retest and liquidity grab of this area right down here. Previous candle body highs, we came right back down. This candle closed. I'll point it out for you. This candle closed with no bottom wick, right? Strong candle, but no bottom wick. Kind of mirrored the setup right over here to the left. This candle closed with no bottom wick. This candle passed the low, created that wick, closed bullish with a wick to fill. No bottom wick on this candle, just complete bullish volume, pushed all the way up, creating this wick, retraced right back down and rejected 156. And we opened this week with this candle right over here, bearish, right? So it looked like we were going to reject 156 again and possibly come down and create another higher low and then continue up. But we actually ended up retracing, flipping bullish, and passing the highs up here. And that's, basically where we were increasing rates, and we pushed all the way up to 158.
You also had a gap down in your weekly candle.
What was that?
You also have a gap down in your weekly candle.
Right here. Right
that
here.
one, and then the current one as well. So you
you do.
Yeah. So you have a gap right here, and then you also had another gap down. But that's the thing that we mentioned in our last simulation session, where we talked about, you're talking about a bullish candle when it gaps down like that and it continues pushing.
Yeah, the bullish big belt.
Yeah.
Yeah, when you get those, it's typically like price is going to continue in the direction, and then sometimes you'll see like this is a very minor one right here, where this candle opened up a little bit higher than the close of this candle. So then you saw that continuation of the bearish trend after that. But this is a very minor one. Most of the time you'll get a nice, it's a little bit higher like that.
Yeah.
That makes sense. So
we'll see those
it's
on
a lot more noticeable.
Higher time frame levels tend to be a little bit more like better to see, right, and closer together, and then you'll see those happening on lower time frames instead.
Absolutely. I wouldn't pay attention too much to that unless, anywhere past the 4 hour, right? Anywhere lower than the 4 hour is a better way to say it. But going into the current price action again on the weekly over here, we just created that bottom wick over here. It's still the beginning of the week. Tomorrow's Wednesday. We're flipping bullish over here, staying above 156. So can we continue up and fill that wick? It really depends on the data that we get out of Great Britain. When it comes to the pound data, we got a lot coming out this week.
Yeah.
So we'll see. We have a lot of stats coming out this week in general. It's kind of what I wanted to point out before. So that's we should have some good volume this week, especially if something happens out in Eastern Europe. We'll see. But yeah, let's go down to the daily over here. And right now, this is where things get a little bit tricky. I was breaking this down a few times for the guys in the group. You have this level of 156, obviously, which we're now holding a support of. We came right back down to 153,500, which held a strong support, reacted to this level as well, stayed above the 50 and the 200 EMA over here, and we've just been pushing up. Nice bullish structure, higher highs, higher lows, rejected 156 over here, and then we just continue right through. Then what we got right here, you got to pay attention to this current price action. So looking at this high being created and closing above 156, we got this higher low over here forming right here. And then we got this strong bullish candle closing after holding support, closing above that level. Then what you got was a weak bearish candle still holding support at this previous resistance. This candle barely, or if it did at all, passed the low of the previous candle, flip bullish, and we continue right back up, retesting these highs over here and coming right back up to that 158 resistance, creating this wick. So now, right now, we're holding a support in that same area, right? We got this huge doji candle, right? A bullish candle right here. This current candle created its bottom wick already. It's the start of the Asian section, and it's flipping bullish. So can we fill these wicks over here and continue up? Really depends on the range that we're in right now and some of the levels that we need to break.
I think you could narrow in into the price action a bit more here. So what I would do is personally, at the level that we're sitting at, I would create like a zone right here. And the reason why is because we've seen a ton of rejections into these areas. You've had a nice break and retest after this price or this candle made a top wick. It's nothing but a straight, sell off. Same thing here, price pretty much came close to it, rejected these areas, and then you had one last pump before price pulled right back down. And we have been respecting this area as resistance for the past 3 days already, right? So if you can break above this, and then you get like some sort of break and retest here on the 4 hour or on the hourly time frame and continued up, there's really nothing stopping us from coming all the way up top into these areas right here. So Absolutely. You have that entire range that you can trade.
And with this rejection of this whole level down here too, and the consistent bullish candles over here, again, if you can break through that level, I was going to break that down on the lower time frames, but if you could break that down, or if you can break it and retest, just like Sharma was saying, we have at least this area that we could be reaching and then possibly filling these wicks. Yeah. But this is going to be a tricky area right here. for us to be trading in.
That's where you let your runners go. That's not where you take a swing trade opportunity, right? You could look for a scalp. The reason why I said that level specifically is because I know some people would have questions of like, okay, why are you not worried about those wicks to the left, right? The past 2 days. And that's because if you get a break and retest right above that area, that's a strong level that we just marked off. It was respected as support in the past and a resistance, and currently it is a resistance. So if you get a break and retest above that, at the very minimum, you have the wick fill. You don't even have to worry about it. And then you can let runners go up to that resistance. And then once that's broken, then where you have that range marked off, that's where you let runners go because price has rejected that multiple times.
100%. And I'm also looking at this too. The way this doji candle closed, it closed like a bullish big bell. It closed below the open or the close of this candle right here. So that being said, could we be continuing right back up? This is the daily too, so it's a strong time frame. Again, we could get that retest right here, and then we can continue up from there. But yeah, again, we just got to clear that level.
Yep.
4 hour. Again, now we can take a look at that level and mark that off. There's a few levels in here that are pretty important. Let's say right here, you got these current wicks. If you want to look at most recent support and resistance, you got these wicks over here rejecting this level, this resistance as well. Then you guys see over here previous support and resistance, hard rejection area every time it taps into it, right over here as well. But right now, this is such a strong level, 155, 450. We ended up holding a nice support right over there and grabbing liquidity before continuing up. So after tapping into 158, we've been creating these lower highs over here, just one lower high in the higher time frames, but coming all the way back down, but we held a strong support. And this is what happened the last time we were in this area. We got a nice bullish trend right back up to 158. So what are the chances we reject this area, respect this trend that we're in right now, and continue right back up? But again, you got to stay patient and wait for this. This is your move right there.
Yep.
So just stay patient for that. And you do have a cleaner move to the left once you do continue back up.
Another thing that I want to mark off here before you get down to the hourly is if you zoom out a little bit just so we can see the bottom of this entire trend here. Yeah, there you go. So after, we obviously marked off this 153,500 from higher time frames. You just broke this bullish structure, right? You came back down and now you're coming back and retesting this. It's too early to say that, hey, now we're starting this bearish structure, we're continuing back down. And the reason why is because price, after creating the support here, did pull back and it is creating those higher lows right to the upside. It's still maintaining that bullish structure. So what could happen here is once price does break above this zone, it's very apparent that we're coming back into that bullish structure to come back and tap into that level that Stefanos marked off. If price rejects this again, then I wouldn't be surprised if there was another sell-off bringing us right back into these zones as we have done here previously. So when you're approaching this level, especially in like the Asian session right now, so hopefully we're able to post this as soon as we're done here. So going into Asian session or even London session, if you see price approaching this, then be very careful. Wait for your break and retest, at least on the hourly time frame, because this is the 4 hour. So at least on the hourly, you will have those confirmations for runners to the upside. If price does not break above this and close in the zone or above this, you do not have a trade opportunity. You need to wait for price to reject and come back down, and then you can target 156 again. So you have to, as we're approaching these levels, wait for candle closes. Don't become a wick.
That's a great point that you brought up too with the trend line, because I feel like a lot of people get very caught up with levels and trend lines where like they'll marry this right here.
Yeah.
Right. You're in this bullish trend. Guess what? You're still in a bullish trend. We're still holding market structure. Right. We broke a little bit over here, but that doesn't mean we're coming down. What you want to wait for, again, like Sharma said, is wait for that break above over here. And if you're going to take sales, wait for market structure to break. When it comes to, this is the higher time frame. So when it comes to any kind of higher time frame swing, you want to wait for safe sales below 156 flat, or even safer below 155, 500. Then you're breaking market structure.
Yep.
Right. You didn't really break market structure yet because you're holding a higher time frame support, and we're still creating higher highs and higher lows. So you just want to wait for this move right here. boom, that's your swing. If that's going to happen. But also, if you guys pay attention to fundamentals, you'll know that we're still in a bullish trend over here on GJ because we just increased rates. People are pulling the money out of the Japanese yen now because it's weak, right? With their monetary policy, it's been very weak, right? We had a little pullback with some panic in the market, but now people are starting to put their money back into risk currencies with everything opening up again. So you have that on your side as well. So don't just try to like marry these trend lines over here and say like, all right, we definitely broke structure, we're definitely coming down. You're in a range, right? You don't know where price is going. You need price to break out of that range and continue up. This is the area that you want to trade in right here, right? Also maybe in here, right? These will be riskier, higher risk, higher reward sells, but these will be safer sells. It gets a little tricky in here when it comes to the market structure, but I think you could definitely catch this move right here with these clean moves to the left. Get a couple of these right here. So you could definitely grab that if you get your setup right here.
Yep. I'm not saying you can't take a trade in the current zone that we have, the blue zone down to 156. I'm just saying those are scalp opportunities, not swings.
100%. Yeah, that's in all the time frames are the same, right? It's just somewhere different when it comes to the amount of data in each candle. So there very well could be a trade inside of here on the lower time frames, but on the higher time frames, when you want to take swings, we got to break out of this higher time frame range, just like you would have to on the 30-minute for a scalp. So as you guys could see, I want to actually see if this is valid. No, could be, but it's not. What we want to look at is this trend right here, and then this resistance. Most importantly, you have a zone right here. Prices, what you had right here was the tap of 158, a lower high over here, lower high over here after retesting previous support. Price came below 156 and held support in here. But once we came back over here, we were still holding bearish structure, right? Because you still see all that bearish pressure coming right back down to 156. But what happened? We ended up closing with this big candle right over here. I believe this was data on Monday, right? Or this morning. Yeah, this was data this morning that came out. Average earnings index. Basically they're in
payment count change and all of that.
Exactly. So that's where you got this. So now we break market structure and now this becomes a range, right? I know a couple of people that were trying to trade in this. I was just saying now it's a big range. So now you really got to wait for certain things to happen before you take anything. So now you need price to just break out of this. On the higher time frames, it's a no trade range. But what opportunities do you have right over here? As we're holding support, get a little fake out, holding support right over here. These candles are getting a little bit weaker. Then we get a tap of this trend line over here, and we get a strong bullish close, engulfing bullish close. Not that strong, but now we're just printing higher highs and higher lows, right? On the hourly. So what could have happened in here? Could you have grabbed a little scalp? First, you want to see what the range is looking like. 38 pips. Actually, let's call it 35 pips, right? So there's enough range in there that you can actually trade something. Low key, I actually grabbed this candle before and closed the 8 pips. But we have this resistance over here, but this liquidity grab with this candle again. This candle came right back down, closed bullish. Doji candle, price closing above this resistance over here. And then this candle created its bottom wick, held support right in here. Past the high of that candle, and that's where I took the impulse entry.
So what Stefanos ended up doing here, as you can see, is he narrowed into his price action. The thing here is, we say all the time, don't trade in consolidation, don't trade in that, whatever level, but you could trade in consolidation. The thing to understand is you need to narrow into your consolidation so much that you understand where exactly is the consolidation and where can you take a trade. We said this entire range on the hourly time frame, 4-hour time frame was a no trade range, right? Because price was simply consolidating. If you go on the hourly, you look to the left, price did the same thing that it's doing right now. It's consolidating, right? You could take a trade here. We're not saying you can't, but you have to understand the limitation of your trade. All of this is consolidation. Don't take a trade here, right? Wait for a break and retest that was very weak. retest right there. So then what I would have done is I would have taken the entry, the same exact entry that Stefanos took, right? I would wait for a clear support to be made, a wick rejection, and then as prices breaking previous wick highs, then I take an entry, because at that point, this entry here, I'm clearing out all these wick rejections that happened, right? And now there's nothing stopping you from, at this point, somewhere around here, you would probably take partials as price is pushing up. Maybe that's your next target, and then let runners go all the way up top here.
I couldn't have said it better myself when you said you need to know the limitations to your trade. And I think we went over this. I know I did with my group, but on one of our Zooms, but a lot of people look at risk management when it comes to trading when you're in the trade. Like that's what you're focusing on when it comes to risk management, other than like over risking, right? So when you're trading and you have your certain setups that are basically going to play out almost every time they present themselves, at least like 80% of the time, those are the ones that you can risk your 2-3%, right? The ones like this, you better believe I lowered my risk to 1% on this, because we're in the Asian session and we're coming out of this consolidation. You got all these wicks. You know that I'm going to be content with 8 pips right here, right? Closed majority of the trade, got stopped at a break even. The spread stopped me out, but that's what you want to concentrate on when it comes to trading. Having a plan for your trade, and being smart when it comes to the risk, and knowing like what situations you can risk more on and what situations you need to lower your risk on. That comes with expertise and experience, and it takes a while to get there, but once you get that intuition with your pair, and you really know the way it works and you know the way it flows, you're going to get a lot better at that. You're going to start feeling, you're going to get into a flow when you're trading, and it's like, I know exactly when I should be closing this trade, and I can be content. I can trust myself, number one, that I'm going to close when I need to, or close when I had that plan. We just spent like an hour on TJ.
Yeah.
Well, I hope you guys got a lot out of that. So that's awesome. So again, this is playing out. Wish I didn't get stopped at break even, but that's okay.
Let's move on to gold.
Moving on to gold. So again, I'm just going to mark off a couple trends that we've been respecting over here that maybe you guys haven't noticed. But we have this one right over here, and then we can mark off the bearish trend that we've been respecting on some of the lower time frames over here, so it's clearer to see. Now, a couple levels that we need to mark off is 1680, which we're not even really close to, and don't really need to mark it off too much, but that's one level that's been highly respected over here after rejecting multiple times and holding support at that level to continue up. We also have 1750. Almost got it. We have 1830. We also have another level in here, I believe 1780, but we have 1830, previous resistance that we've rejected multiple times and also faked out. And then we got like 1880 somewhere up here where we've 1780 or 1875. We'll mark off 1880 where we currently were just tapping into. Beautiful. And those are your levels. We also have the actually bottom wick of the monthly that we can mark off. And we'll see where we go from there. But as you guys can see, after tapping into 1680 for the second time on the higher time frames, we've been holding this bullish structure, and we just filled this wick, right? This bearish candle over here ended up rejecting this area pretty hard. I'm guessing that was with NFP data, positive NFP data. And we came here and held support over here at 1750 again. Strong bullish close right at 1830, and we ended up rejecting that level, right? Pushed up, rejected the level, closed bearish. But we ended up holding a higher support or a higher low at this 1789 level. Looking at the weekly, this is that zone that we've been sitting in right here. From 1830 to 1750, it's just been ranging over here. We finally broke out of it, right? We've had a lot of fear in the market the past week or two, pushing all the way up. Got a nice strong support held at 1790. I want to make that. and we can adjust it if we have to. Didn't work. So we've been holding support and kind of consolidating in this area on the lower time frames, but also the higher time frames as well. And now we've been pushing up. We got a clean close above 1830. We pushed all the way up here, tapped into 1880, and then guess what? We got that news this morning that Putin was maybe holding off a little bit. He was moving troops back. They wanted to lean more towards diplomacy. But you also have this trend line up here that I was mentioning before.
We have that, but we also have the PPI news coming out from the US, which is also very important for gold.
Absolutely. So they could be pricing at it.
Yeah, the massive hike, which obviously is going to get passed down to the consumers in the coming weeks and months.
Oh, yeah. You guys are going to feel it too. All right. So again, we just rejected this level. Flip bearish. Are we coming down into this level to hold support, or are we going to break below 1830 again? Daily. Over here, we got a strong daily close at this level over here. Last time that happened, we continued right bearish. Wow, GJ's taking off. We were consolidating in here. We got that last tap, like a double tap on the lower time frames, and then we just tanked from this level, right? So now we get a strong bearish candle close on the daily, top wick rejection, engulfing with a wick to fill. Could this candle create a top wick, pass below that candle, and come back and retest 1830 again? Could very well happen. I actually want to mark this level off too. 1850. So we get that previous resistance, previous support as well. You can probably bring that over. Yep. 1850 has been a significant level over here. So now we have that support that we just rejected with this candle, right? This candle pushed all the way down here, rejected it on the daily. So can we continue through it? Looking at the 4-hour, we got the bearish structure over here. Now, what I'd like, you have this support that you need to break through, but you now also have this previous support, which is now holding a resistance as well. So right now we're sitting in a range, what it looks like on the lower time frames. I like this if this level wasn't here, as far as taking an impulse entry after creating a top wick and then passing the low of the previous right over here. We get a weaker bullish candle right here. We get the top wick formed, and then we pass the low over here. So can this continue right back down to either this level down here, 140 pips, or get the wick fill right here, 67 pips? The only thing is we got to break through that level first.
Yep. So for both of these pairs, make sure you're waiting for your candle closes out of these levels on, the 4-hour, 1 hour, waiting for your break and retest, and then looking for your entries, unless you're looking for a scalp. But even then, I think you're going to have great scalp opportunities when the data points are coming out. So don't try to trade in the middle of the session, because you're probably not going to find potential trades.
Great point. All right. So see, I hate when my breakdowns get, or not breakdowns, but like the price action gets like messy like this, because I could see why you guys get confused over what's really going on, because you really want to hone in, especially like when you start to get confused like that. Hone in on just the most recent support and resistance. We know that this is a significant level. We can actually just mark it off like with a horizontal line, 1852 right over here, which we're now breaking below. So it looks like by the price action right now that we can be breaking through here. I would not take a sell right now. Definitely not. You missed the move, but you didn't completely miss the move, because what you could get is a retest of this level, 1852, to then continue right back down. Right. So just wait for that. I know it looks like you're missing the move right now. And if you miss it and it continues down, so be it. That's it. But first, you want to measure the range as always. See if you get enough pips in here, about 40 pips, right, to retest the low. But also don't just jump in. And you also have like all these wicks over here. So to me, that's like not that attractive during Asian session. I would really wait for this retest, if anything. And if not, I would just stay out of this and wait for price to break 1848, right? Because you got a clean move over here, at least to this level. And you know that you cleared out of here. So I think safer sells are going to be below 1848, right back down to 1842. Get about 58 pips in there. Plenty of pips for you to grab. Looking at the 30-minute. 30-minute is now breaking below that level. Again, it's starting to get very hectic in here. It's very crowded. So I think safer sells are going to be below this level. 55 pips, yeah. And you actually have 44 in here. But I'm not going to be trading in this. I'm not going to take this in this area over here. I'm going to wait for a break at this level to continue down.
And that is also, if you go back up to the hourly and 4-hour time frames, that's also the break of previous lows. So you have much better entries at that point to the downside.
100%. So I think hopefully you guys got a lot out of that. We will be with you right tomorrow, Wednesday, 6:45 Eastern Standard Time. Looking forward to that as well. So guys, do your own analysis, do your own breakdown after this, and hopefully you got a lot out of this. But if you have any questions, just let us know. We'll either hop on a Zoom with you to kind of break this down further, or just send your screenshots, stuff like that, and we'll get that done.
Absolutely. So make sure you guys, I know this was a little bit longer than usual, but we broke down all the levels. So this is going to help you guys for all the trade opportunities that you're looking for the rest of the week and all the sessions. If you have, like Stefano said, if you guys have any questions, feel free to reach out anytime. For me, Instagram, same thing at SharmaFX. But tomorrow we will be doing a live session. So if you guys have any questions, come on to the live sessions and then ask your questions there. And then you can also see how we manage our trades, take our trades, and all that type of stuff as well live. Other than that, have a great rest of the week and then trade safe, everyone.
Bye, guys.